Hi guys, how's it going? Today, wow, what a day indeed. It was a crazy day in the market, not gonna lie. We saw these surprise tariffs from Trump today on Mexico. They're gonna start 5%, but I think they're gonna keep going up, I think monthly, until they reach 25%. And it's an interesting move from him. And we'll see if it gets Trump what he wants. The rationale, the justification that he used was he's gonna impose tariffs on Mexico so that Mexico will have to rein in on the illegal immigration, as if Mexico is exporting immigrants, which is it's an interesting thing. Like if that's true, and it could be, I suppose. But if that's true, it's an interesting dynamic, and we'll see if it works. But in any case, it created a lot of volatility in the market. I was listening to Peter Schiff, and he's saying that he thinks that Trump is using this as a way of bringing down the market right now, so that he forces the Fed to start easing, cutting rates and starting QE once again, and this way Trump can get a market rally towards the end of the year and into the 2020 presidential election, so that he can claim that there's a market rally going on and that he's doing fantastic. So we'll have to see if that works out. I mean, President Trump has pulled off some pretty amazing things in the past. Getting elected president of the United States is quite a feat, so it could work. Who knows? But as far as we're concerned, as investors, this caused a lot of instability in the markets, and I think we'll have to wait and see, Well, moving on. As you know, Mexico tariffs, they basically are opening up another front in this trade war with President Trump. I don't know at which point maybe this is too much. We'll have to see if that ever happens. But it's interesting to watch. As I was reading today the Wall Street Journal, and they were also pointing out that these tariffs might be the thing that picked the bubble, that make everything go crashing. And we'll see. We'll see if that's the case. After all, if spending starts going down and the economy starts slowing down, what we'll see is companies that will stop being able to repay their debts, and they'll have to refinance, and they'll have to go to the credit markets. And what they might find is that the investors are no longer confident, and they might not be able to raise capital, which could cause restructuring. And if this widespreads in the economy, what you would see is a bunch of defaults going, especially in the retailer sector. I've been looking at that, and let me tell you, that's a disaster waiting to happen. There's a lot of companies that are just a 10% dip on revenues would destroy them. They would have to default on their debts. And that's no joke. If suddenly the retail sector goes, it goes all of that. All of those companies won't be able to refinance. And that goes, well, it's a domino effect. Maybe it gets to even Tesla. And, well, I might as well talk about Tesla. But let me tell you, I like Tesla. I like the technology. I want the company to succeed as much as anybody else. It's a small position for me, but there's no denying the company is incredibly indebted. And that debt has to be repaid. Most of the time, what Tesla does is simply raise more cash. What they do is they go to the credit markets, they make an offering, and people lend them money. Sometimes they raise a little equity as well, but it's at the end of the day, they're raising cash. If the confidence in the credit markets is shaken, and we start seeing companies default on their debts, I can guarantee you people will say, well, maybe I shouldn't lend to Tesla. Maybe I should wait and see what happens. And suddenly, Tesla won't be able to raise cash. And in that scenario, things could get ugly. I mean, we're talking about bankruptcy. And normally, I wouldn't believe that. In normal conditions, I wouldn't believe that's possible for Tesla. But if the economy slows down, sales go down for Tesla, for the Model 3, they just performed 10% worse than we're expecting it. And we're expecting some good numbers, but if they perform 10% worse than we're expecting, say, I think we're expecting about 90K this month, and we report about 80K. That's well below expectations, and that puts Tesla into another cash burning year. So it could get ugly. But what could be worse is a possible trade war with China, in which Tesla's vehicles are nevertheless still taxed, even if they're produced over there. We don't know. Like, there's a lot of uncertainty. I have a good position on Tesla. As I said, it's a small position. It's in the 200s. I'm a little bit underwater in that one, but not a big position. As I said, as I always said, just go small. You don't have to go all in on anything. We're investors. We're not gamblers. So we need to position size adequately, take it easy, diversify a little, make some due diligence, try to find good companies, but it's not necessary to go all in, never. And I'm certainly not all in on Tesla or anything right now. I'm very well diversified. In fact, most of my holdings are in something else, and I'll get to that. Oh, but before I move on, I just wanted to touch very quickly on these Elon Musk's emails that are getting leaked. It's pretty funny. We all expected that the SEC arrangement he reached, I think, a couple months ago or something like that. We all thought that was going to be it, right? And well, we were wrong. At least I was. He's now leaking emails, which it's kind of funny. But if you think about it, it's concerning to me as an investor. I think this is a little bit concerning because what it proves is that there's intent on his part of not fulfilling his end of the bargain. Even though it's not technically illegal, it proves that he doesn't give a damn about it. And I don't like that. I think the spirit of the rule is that he shouldn't be communicating material information outside the appropriate channels. And I know that a leaked email is not technically illegal, but we all know that he's leaking it, or that he knows it's gonna get leaked. Chances are he knows that there's a very good chance of the email getting leaked, and so he's now writing these very bullish letters. And I don't know. I'm kind of mixed on that one. But hey, I mean, we all know that Elon Musk is a peculiar character. So, as I said, I really want Tesla to succeed. In fact, I'd like to own a Tesla, a Model 3. They look really cool. And if possible, the new Model S, that'd be cool. But we'll see. As a stock, that's a different story. So I hope they make it, and I think they have great potential. But it's a risky stock, guys. So keep it under control. Don't go all in. Don't do that. I can't stress that enough. I've seen countless guys already complaining about margin calls and all that. It's not necessary, guys. Take it easy, okay? Now, moving on, I'd like to touch on Uber. As you know, this is one of those really hype stocks that recently had an IPO. And it's an interesting stock, and it was touted as the next big thing. But I think when it made its IPO, it was already big enough. And so inevitably, investors are selling it off. They're not finding value in the stock. And I think they're right. To be honest, they were... I remember, this is an old story, guys. I mean, these guys, they've been, oh, we're going to IPO next month, next year, and they kept doing that for so long. Eventually, they IPO, but it was a huge IPO, and they raised a ton of cash and at a huge valuation, which at the end of the day left very little upside to retail investors. And well, here's the thing. I mean, if no one else can find value in a stock, then it's gonna go down. It's gonna go down to the point where someone starts finding value in the stock, and that might be much lower. But part of the interesting thing about this was that, and I was watching this video from, I think if you haven't seen Hypercharts, Hyperchange, I think it is. It's a really good channel, by the way, and he was going on about how growth is moderating on Uber, which is very interesting because if you think about it, this was supposed to be a huge growth story, and to see growth moderating so soon after the IPO, that's just terrible news, guys. Growth usually correlates very well with the multiple one assigns to something. So, say for example, if you're a company that's growing at 100% earnings every year, chances are a fair multiple for your earnings is 100. So if you have earnings of $1 and it's growing at 100, your value would be 100. And that's why growth, the anticipation of growth rates, is so important to determining the fair value of a company. And so if we are already seeing a company like Uber slowing down its growth, that should lead to investors thinking, well, maybe we should contract the multiple we are assigning to the company. And that's not good news, guys. Because last time I checked, I think they're trading at 100 times forward earnings. So the next year's earnings, not this year's, next year's, times 100. and that might be a little bit too much, guys. So we'll see what happens. It's an interesting story to follow, and in fact, if it never becomes profitable, I think Uber is going to be the poster child of this market cycle. It's a company that came out at the biggest valuation, I think, and it was unprofitable, which is unheard of. You would think that by this stage, when they're IPOing, they would already be profitable and had a lot of these positive metrics going on for them and all that. But wow, guys, I mean, we've seen a lot of crazy things these cycles, let me tell you that. But at the end of the day, they have a lot of cash. I think they have more than $5 billion. So chances are they're going to be able to survive for a while, but we'll see. We'll see, guys. One thing I did want to say about Tesla before moving on is the fact that I see two good news. One, the Model S is going to be refreshed, and it's very well. And this is something that Tesla desperately needs, because we're seeing that the Model S sales is dropping like a rock. What's happening is probably because the Model 3 is cannibalizing a little bit of those sales, but also because the Model S is already kind of old. I think it's from 2012, and so most customers right now that are interested in buying the Model S, they're thinking, well, I might as well just wait, maybe buy the Model 3 if I want to, or maybe lease it, and when the refreshed Model S comes out, then I'll get that. And why it's so important? The problem is that the Model S and the Model X, those are the highest gross margin cars for Tesla. So Tesla can make a lot of profit, a lot of gross profit, based on selling a lot fewer Model S and Model X cars. And right now, the business model from Tesla is shifting very quickly towards building a mass production electric vehicle. We don't know if that's going to work. Hope it works, but we don't know if it will. What you saw in Q4 and Q3 of 2008 was mostly due to the Model S and Model X selling really, really, really well, and because the Model 3 had really high margins at that time. But that has changed in Q1. And in Q1, Model S and Model X, they dropped like a rock, guys. I mean, that was terrible. And they're guiding to another terrible quarter for the Model X and Model S in Q2 and going forward. And I think this will continue until they get refreshed. Once they get refreshed, we might see a nice bump in that one. We'll see. But it is worth mentioning. And another thing that I think it's positive is the fact that it looks like the Model Y, we already know where it's probably going to be built, which is in Fremont. And that's good news, guys. Fremont has a very nice location. It lends itself very well to distribute vehicles all over the US and basically North America. But it is also very easy for Tesla to ship from that particular factory. So I think it's good news, guys. We'll see what happens here. I think Tesla should focus on refreshing Model S and Model X. High margin vehicles are really important, and they should have been refreshed a long time ago, guys, but we'll see. And another question about the Model Y is how high are those gross margins are going to be? If they're like the Model 3, then it's maybe not that great for Tesla, because what we need is higher gross margin sales, guys. And right now the Model 3 is not cutting it. It's not cutting it. They have to either raise prices or lower costs. And I think lower costs are very difficult in the meantime. In the near term, they're very difficult. Over the long term, the Maxwell acquisition can make a difference in battery costs, and maybe automation can make a difference. But in the short term, I think they should sell higher priced Model 3s. They should raise the price. And what's the problem with that? Is that right now, when demand is weakening, that exposes the company to lower sales. So it's a tough time right now for Tesla and the whole auto industry, by the way. We'll see what happens. Okay, let's move on. And another piece of interesting news was that recently Patrick Shanahan, the acting US Secretary of Defense, is calling on Asian allies of the US to build and spend more in national security, which is something very similar to what President Trump was doing with NATO. They were telling, "Hey guys, you're not spending as much as you should be spending on defense," and that's very interesting because it signals that again, basically, we're building up inventory and weapons and training more military guys, and so tensions are escalating between China and the US, and this is not good for the markets, guys. The markets like certainty. This creates uncertainty, and uncertainties get discounted at lower prices. So I hope this gets resolved. I don't think it's gonna lead to a shooting war eventually. Personally, I think that at some point, both economies and the world economy will feel it to such an extent that a trade deal will be preferable to attacking each other and putting tariffs on each other. So, but right now, both sides feel comfortable. So I think this trade dispute will will continue until it becomes uncomfortable for both sides, and we'll see. We'll see. I think at the end, both sides will blink in a way. But overall, this is why most people are thinking the market top was in May, and that the saying sell in May and go away was actually very true. So, and it's funny because I think it was at the first day of May that the markets reached the top, or they started selling off from May. Yeah, I think so. And it could be that this sell-off lasts for a little while. We've broke support of in multiple charts. Right now, I think the SPY is holding the 200-day moving average. We'll see if it holds. Hopefully, it will. But I think the Dow already broke support, broke that moving average, and I think the QQQs are also about to break. So that could signal that the market's gonna go lower, guys. I will tell you this. I don't think that necessarily long term it will continue to go lower, because at the end of the day, I don't think Trump wants it to go lower. I don't think the Fed wants it to go lower. We already saw that these guys are willing to step in, but until they do, I think maybe you should hedge a little bit. Personally, I graphed a few puts just to hedge my deltas and go a little bit risk off. Maybe if we do get a pullback, have those funds to reinvest at a lower level. It's just risk management, guys. You got to take it very carefully. If you don't know what you're doing, maybe just go cash. There's no shame in that. But if you're holding good quality companies, really good companies like Amazon, Tesla, like those type of companies, you should be fine. I know it can get scary, but I think what it will probably represent in the long run is buying opportunity. But yeah. And lastly, guys, I just wanted to touch on Bitcoin because I think it's a very interesting topic. I've been following Bitcoin for a while. I always was interested in it. I never bought it because I thought it was overvalued. I knew a little bit of it. I like the idea that there's a limited supply of it. I would say that's the biggest plus I see in Bitcoin. And I always followed it, and I thought it was really cool that the technology was new and it could revolutionize a lot the transfers between countries and so on, because it can do it much cheaper. Basically, it renders a bank useless. You can store value. You can store value, guys, in a Bitcoin wallet in a very discreet way. So it has a lot of pluses, but I always thought, wow, this is very expensive, especially after the boom it had in Bitcoin. But I've seen a lot of accumulation, guys. There's been big players buying into the coin, the cryptocurrency. And if you think about it, the investment thesis is very simple. The dollar will eventually collapse. All fiat currencies will eventually collapse. And if you think about it, that's entirely possible. After all, never in the history of the world has a country been able to print as much currency as it wants without producing hyperinflation. And I know that the US has gotten away with it, but that's because of very specific reasons, like being the world reserve currency, mainly because it is the world superpower, has, I think, the biggest fleet in the world. Like, even if you put, and I've seen simulations of this because it's just cool to think about it, but I've seen simulations that if you put every single fleet in the world together versus the US can't take on and win. And so it's just a huge navy that the US has, and it's all over the world, and they're protecting all the trade routes and all that. But with President Trump, there's a pivot. The US is becoming much more isolationist, is becoming, is insulating itself from the rest of the world. And I think that's fine. I think there are good reasons for it. I think they've exported away their jobs. But at the end of the day, guys, if that happens, it means that the dollar also will lose its relevance. And if that happens, and the dollar gets priced based on simply supply and demand, well, then all that demand of people wanting to buy dollars from India and China because they want to buy oil, it's going to go away. And if that happens, the US might have to face the reality that its currency is going to devalue as much as any other currency has ever devalued whenever you print as much as you want. And well, if that scenario, which is, it sounds crazy and sounds improbable, and it sounds like it would never happen. But if it did, if that happened, then I don't think people will necessarily go to gold. They could very well go to Bitcoin, because unlike gold, Bitcoin, you can't control it. Nobody can control Bitcoin. You can control gold if you hoard it. And if you're the guy who's guarding the gold, which is what banks used to do, you can emit notes that say this note is worth an ounce of gold or whatever, which is what the dollar essentially was at the beginning, at least. But we saw that that didn't work. So it could be that if all of the world currencies collapse because of that, it could be that everybody pivots to crypto. And in particular, they probably pivot to Bitcoin. And I don't know, guys. If you want me to talk more about it, I know a lot of, I know a little of it, and I find it very cool. It's a very interesting topic. Personally, I'm gonna buy a little bit of Bitcoin. I don't know how yet, but if you want to donate me, I have a wallet, like maybe just one Satoshi, something to just dip my toes, you know. But yeah, I want to buy something. I think it's a cool technology. It could work, and if I were to buy it, I'd probably hold it forever, or at least until this scenario happens. But I don't know, guys. Tell me what you guys think. I'm open to feedback. I want to provide great content for you. I'm a busy guy, so I have a lot of things going on. So I have to figure out a way to produce content in an efficient way, and at the same time make it enjoyable for you guys. But well, that's it, guys. Thank you very much for watching, and have a great day. Thank you very much.